Thank you, Mr. Chair. Welcome to both of you. I just want to say thank you, both to you and your staff, for all the great work and partnership that you've done in Nevada around affordable housing. Thank you. I know you're there. I've talked with both of you. Your staff is incredible. They're on the ground, so thank you. Let me start, Director Thompson, with you. I also have to thank you and your staff for the very insightful and thorough review of the Federal Home Loan Bank system. This is something, I think you and I talked about it from the very beginning, and the challenges that I felt we needed to address, particularly around the core mission of Federal Home Loan Banks, which is housing and community development. So you did an analysis. Many of the changes or recommendations in your report are recommendations or actions that the agency can take on its own, but there's also recommendations to actions for Congress. So I want to talk to you a little bit about those. Can you tell us why the Federal Housing Finance Agency recommends Congress improve access to the Federal Home Loan Bank system for non-depository community development financial institutions, or CDFIs?
Sure. Thank you for the question. We spent a lot of time on the Home Loan Bank review, and we got a wealth of information. And as you mentioned, some of our recommendations are statutory and some we can do on our own. But what we found in our discussions was that CDFIs play an important role in local communities. They communicate with all housing stakeholders in a way that is just so unique and helpful. And it produces results, especially in underserved and low to moderate income areas. And we wanted them to have the same benefits that other members have, because other members are able to commit collateral, especially if they have, I think the limit is if they're a small community institution, they can pledge collateral, but the CDFIs are not able to pledge the same type of collateral. And so we wanted to make sure there was parity, because we're talking about small, institutions and small members, and we want to make sure there's parity throughout the membership. So one of our regulatory asks is to make sure that CDFIs have the same benefits as other small institutions like community banks, so they can continue to build and provide affordable housing in their communities.
Thank you. And we know for decades the FHL banks set aside was 30% of their net revenue, 10% for the affordable housing program, and 20% to repay the savings and loan bailout. Those payments never threaten the stability of the system. Why does FHFA recommend that the assessment for the affordable housing program be increased by at least 20%?
Well, thank you again for that question. For the very reasons you mentioned, right now the home loan banks are setting aside 20% in retained earnings, which counts towards capital, but they're all well capitalized, and they can well afford to provide at least another 10% to help with this housing crisis that we're having throughout this country. They're in 11 districts around the country. They're serving all of the states and counties in the United States, and they could do a better job in providing housing development and affordable housing and community development. And I would say, though, that they are starting to increase their contributions, but it would be really helpful to have a statutory contribution, the statutory requirement increase from 10% to at least 20%.
And we both know this. The FHL banks earned $6.6 billion last year. And we've said this already, unlike Fannie and Freddie, the Federal Home Loan Banks do not pay any taxes.
Right.
So I would ask my colleagues to join me on legislation that addresses some of the recommendations that you've just talked about that are so essential to bringing more dollars into our communities for affordable housing. I only have about 40 seconds left. Let me, Acting Secretary, ask you this. Can you talk about the proposed rule to streamline the Home Investment Partnerships Program?
It's still in its interagency process. I'm happy to say that we are doing it. One, I think it's a long time coming to modernize this program that is the largest grant program the federal government has to make sure we have low and moderate income homes and home ownership opportunities. We are almost there across the finish line and getting the rule out for comments, and look forward to working with you in your office on how we did.
And we thank you. I know your staff's been great working with us on on the bill, the Home Investment Partnerships Reauthorization Improvement Act that I've introduced. It was part of the subcommittee hearing that Senator Smith was just talking about with Senator Lummis. And there was a conversation how important this program, the home program, is to building affordable housing in communities across the country. So thank you for your good work.
Thank you.